today. Kevin Green's with me, senior markets correspondent. Look at this, Kevin Green, a different kind of morning, right?
Yeah, different kind of morning here. You have what 80% of the stocks in the S&P 500 in the green so far. The sectors are looking pretty healthy. We only have one that's Dow, that's consumer staples. Really not surprising. That's a little bit more of a defensive sector. You are seeing more risk on, especially when you're looking at the Mag 7 stocks. You kind of talked about it earlier here. You're seeing a lot of outperformance when it comes to the Mag 7 compared to the broader index for now, which is also fairly good here. You also have the Russell that is also outperforming there. A little bit more of optimism here for the market. Now, where we open here today, Nicole, is actually going to be very interesting. If we kind of look at the daily chart here, the 5830 area is something that I've been keeping on the radar here for this morning because it's above this final resistance level when we look at these channels. If we kind of go back over the last 3 months, 4 months, we had this initial channel that took place, and then we actually saw another breakdown in another channel that actually took place. This is the primary one that we are breaking above right now. That's going to be an area of resistance. As you talked about, do we actually sell into the strength? That could be actually the case here. We've had a really good performance right now, but we might be seeing some chips being taken off the table. We do have a 200-day moving average, which we broke above, sitting at 5750, kind of closely aligning with that upper end of resistance right now as well here. So I think today you want to be able to hold on to these gains as much as we possibly can. You do not want to really see any type of fade or any type of retest of that 200-day moving average and sustain over these levels for the next week or 2 weeks. I think that would be ultimately bullish. You'll probably see also some re-ratings when it comes to analyst expectations for the S&P 500 year-end target. If we're looking at the intraday chart, 5,900 to the upside, seeing some call selling flows there, and you're actually seeing some flows at the 5,940 level as well. So we'd be mindful of that. But 5,900 could be your really big area of resistance for the market so far here. If we break down 5,800, looking at some buyers potentially trying to step in here, you would like to hold that. Anything that we break down further, 5,775. If we go below 5,775, that's where it gets a little bit dicey to the downside here today. But overall, really good picture when you're looking at the equity market. You just want to be able to hold these gains, continue this enthusiasm, and hopefully the commentary coming from the White House continues to provide, once again, bullish sentiment creeping back into the market here.
Yeah, and I mean, today's moves here, we're at the highest level in a couple of months for the S&P 500. The NASDAQ goes back to the highest levels since February. You're watching oil, gold, soybeans, all of these things that are related to today's action. Why don't you start with your oil chart? We want to check out what you're thinking.
Yeah, so this oil chart, we actually looked at this last week and just getting a little bit of an update. We talked about these really big moving averages, these anchored volume weighted average price levels here. We actually have a 3-month daily chart. We have from the lows, that average, that purple line that has been broken through now. We also have from the highs that we had back in April 1st, we're also breaking through that area of resistance, and the 20-period moving average, we're breaking above that as well. You want to be able to close above these levels here or keep these gains if you are an oil bull right now. And the next big area of resistance is going to be that $65 level. A lot of energy analysts have been focusing on $65 as that gauge of economic slowing being priced into the market, or are we just seeing aggressive selling just because of not only because of the economic slowing narrative, but also because of the increase in potential production from OPEC plus, even though the narrative there has been a little bit murky. So a decent little bounce off of the lows here, Nicole, for oil. Let's see if we can continue to have some follow through. The MACD does look bullish so far. Volume has not really complemented this up move yet, but hopefully that actually does kind of take place here in the near term. And then we're kind of looking at gold. We have this breakdown, risk on sentiment. You're starting to see some sellers coming into gold. Not surprising here by any stretch. But we also have some breakdowns when it comes to the technicals for gold as well. The CCI officially now kind of providing that bearish trigger to the downside. This is a 3-year weekly chart, and MACD looks like it wants to hinge. Anytime that we actually have this breakdown for the CCI crossing around these levels, we actually do see gold coming and hitting that 20-week moving average or getting fairly close. We only had one time where it was within about 0.5%. But you could look at a potential pullback here. That doesn't mean that everything, sell gold and it's never going to go up again. But this might be the signal of a consolidation period hitting the market. And then the last thing is soybeans. That's a huge export good for the United States. And China has, since basically the Trump 1.0 tariff battle and trade war, has really kind of weaned itself away from the United States, continues to increase its purchases from Brazil and Argentina. Soybeans could be on the table here as far as a deal, and that could actually not only just kind of break this consolidation formation, kind of two cup and handle patterns that is testing the neckline here right now, but this also could wash out some of the short sellers within this market. Now, the inventory levels for soybeans in the United States is really healthy right now. Global landscape actually looks fairly healthy. We do have a WASD report that's going to give us an update on the projections for end of year targets for this year. This one is the one to keep on the radar. In Trump 1.0, once they came up to a deal, soybeans rallied really aggressively here. This is an input good. I wouldn't be concerned about it when it comes to inflation, but I know a lot of farmers that really want to see this breakout from this 1070 level to the upside, try to get above that 1200 level that we've seen, around June of last year. So interesting chart. This is going to be a tariff watch and a trade war and trade deal commodity that we have to keep on the radar here.
All right, I'm gonna, we're out of time, but the VIX is below 20. We haven't seen that in some time.
Yeah, it is crushing here. You would think it would actually crush a little bit more aggressively, but it hasn't, but it continues to inch to the downside. I'm actually looking at the VVIX, which is actually getting very close to very oversold areas here. So we have bullishness in the market. Volatility is really showing that. But if you have, if you wanted to protect a portfolio right now, Nicole, it's relatively cheap to do so, not only in the SPX options, the SPY options, but also utilizing VIX options or VIX futures here. Once it gets down to around that 90 level for VVIX, that's where it can actually re-rate fairly aggressively higher here. And that would be, once again, another signal that we might be getting closer to an area of resistance. Doesn't mean we make new lows, but maybe a pullback could be on the radar here. We're not at that level yet, but volatility has definitely crushed here. And you probably do not want to see volatility getting to that 16 handle if you're an intraday trader, because that makes it very difficult to be able to trade those markets.
All right, Kevin Green, great to see you. Thank you so much, Kevin.